Welcome back, traders. I'm Christina Bartanidou, market analyst, and in this week's technical analysis video, I will be analyzing euro dollar, pound dollar, and gold. Well, markets are entering a shortened holiday week in the US, and investors are waiting for fresh data that could clarify whether a December Fed rate cut is still on the table. Meanwhile, in the UK, the Chancellor will finally announce the autumn fiscal budget after intense debate over income tax increases. And on the geopolitical front, developments remain worth watching as President Trump negotiates a new peace plan for Ukraine ahead of the Christmas and New Year holidays. So now starting with euro dollar, well, several US data releases are scheduled this week, though it appears that the core PCE inflation index has been rescheduled. That means that investors may turn their attention to retail sales, producer price indices, and some jobs releases such as the initial jobless claims and private ADP weekly employment figures. Now, interestingly, despite Fed board member John Williams reinforcing hopes for a December rate cut on Friday, euro dollar struggled to benefit, remain subdued near the 1.15 level. Of course, it's currently trying to recoup some lost ground, but overall, we don't have any strong signals that the latest downfall is oversold. If you look at the technical indicators, the RSI is still below 50 and some distance above the 30 oversold level. So downside risks haven't completely faded out, but what would be meaningful, perhaps I would like to see a clear close above the 20 and 50-day moving averages, which has been constraining upside pressures in previous sessions, and more importantly, a break above 1.1650 could actually violate this negative trajectory and therefore shift the bias back to the positive side, in which case we may see a more impressive rally towards the 1.1730 number, and then even higher, the 1.1840 number could come next into view. That's where this broken support trend line from spring is placed. Now, in the event that downside pressures continue, perhaps in the event that US data releases suggest that the Fed should keep interest rates steady in December, or in case geopolitical tensions intensify, then we may see a pullback towards below the 1.15 level, in which case the price could seek support near 1.14 and 1.1420, where the 200-day moving average is placed. I expect any breaks below this territory to actually cause aggressive declines, probably towards the 1.1280 level, since there are no nearby key support levels. Now, looking at pound dollar, the UK budget announcement will be a major event. There has been a significant debate about whether the Chancellor should raise income taxes to fund deficit. Recent reports suggest that she may avoid raising taxes, but the final decision will come on Thursday, and that could introduce fresh volatility for British pound pairs. And looking at pound dollar, we can see that despite a slight recovery attempt last week, the price keeps trading below this important resistance trend line at 1.3135. The 20-day moving average is also within the same zone, so perhaps any increases above this territory could activate fresh buying. And I believe that perhaps a move above 1.32, close above this zone, could be more constructive, likely sending the price straight to the 1.33 number, where the 50 and 200-day moving averages are currently about to post a death cross. If a death cross gets completed in this territory, then that could be a negative signal about the market trend, which has been leaning to the downside since September. We had new lower lows and new lower highs. And according to the technical indicators, as in the case of euro dollar, we still don't have clear signs of an oversold market. So downside risks remain alive, and perhaps a break, and sellers perhaps are waiting for a close below 1.30 and 1.2945 in order to target the next support territory at 1.2865. And finally, looking at gold, while Williams' dovish remarks were not enough to fuel a strong upside reaction here either, but the 4,050 support zone continues to hold firm. The 20-day moving average is also quite supportive, and given the geopolitical risks which are back on the spotlight, there are still negotiations about the war in Ukraine, and it seems that the political crisis in the Middle East, they haven't completely faded out as Israel moved with another strike in Beirut, intensifying tensions with Hezbollah. So probably investors may keep feeding demand for safe havens such as gold, and what remains to be seen is whether gold will successfully overcome the 4,130 number and the 4,177 territory where this tentative resistance line is placed. Any increases above that could boost the price towards the previous highs and perhaps towards the 4,400 psychological mark, which the price failed to achieve back in October. Then beyond that, we will need a strong catalyst in order to continue towards the 4,500 and 4,560, where this resistance trend line, a tentative resistance line from April is located. Well, if we look at the technical indicators, we still lack direction here. The RSI is around its 50 neutral mark. The stochastic oscillator has just turned up, but the MACD is still below its red signal line. So there are mixed, technical signals are mixed. What could cause a bearish action is perhaps what could be a more important bearish action is perhaps a decline below the 3,930 and the 4,000 territory, where the price posted a double bottom pattern. So if the price violates this floor, perhaps that could signal more declines ahead, in which case the 50% Fibonacci retracement level of this uptrend at 38.45 could come into view. Then additional decline from here could then target the 3,730 number. So that concludes today's technical analysis session. I hope you found it useful, and I wish the best of luck in your trading activities. So we'll be back with more technical analysis on Thursday. So thank you for watching and see you next time. Bye bye for now.